Good morning, everybody. Hope you're doing well today. I am glad to be in here. It is Thursday after the Fed dropped interest rates by half a point yesterday. We'll talk about the reaction to the market yesterday and today when Dave joins us here in just a few seconds. Hey, before we do that, though, let's not forget that in this world we live in, there are so many things that are out of our control. However, you can take control of your investment portfolio by knowing the amount of risk you have in that portfolio and making sure that it truly lines up with your risk number. That's why I developed the core retirement design. Give me a call at 863-382-0037 to schedule your core retirement analysis. With that, we got Dave coming up next.
Mike and the mechanics and Morning Dave and Phillip Statler, because this is the time every morning where we check in and find out what's going on Wall Street. The Federal Reserve yesterday did something that we thought might have communicated a little concern. Well, the politicians are saying it might. We dropped our interest rates by 0.5%. Let's find out what Wall Street's reacting to it. And we've got Phillip Statler on the line from Statler Financial Services in downtown Sebring right now. Phillip, good morning. How's your money doing today?
Hey, good morning. Hey, this morning is going skyrocket up, but yesterday was a little different story. I mean, the half a point decline came in. Obviously, they didn't listen to you and me. And so the market actually went down by the close yesterday. And we saw nothing but red ink across all the indexes.
Absolutely. And, it's one of those things that one of the preachifying I've always done. Money doesn't believe in politics. Money just looks for other money where it can make more money. And what happened after the interest rate tick, I'm guessing, and I'm betting I'm on target, whole bunch of the big money guys had already plugged in some changes in strategy and a shift in stock strategy to and from dividend-based stocks, to and from growth stocks, basically changing their mix. As soon as Paulson announced the half-point rate cut, the markets went seismographic, kind of the description that I'd had earlier, and there was a little bit of selling. Dow ended up down 103 points. Standard & Poor's was down by about 0.25%, down 16. The NASDAQ was down 55 points, about 0.33% yesterday, as a whole bunch of traders unloaded stocks that weren't going to be benefited by the interest rate decrease, and then overnight it looks like they're kind of porking up on the stocks that are going to benefit, right?
I guess so, Dave, because the markets are definitely solid green, doing well this morning, making up for whatever losses plus some yesterday. So that's news from that standpoint.
It's a relatively slam dunk. It looks like it's going to be a good day on Wall Street today. I did notice that step number one, the Bank of England did not follow suit this morning. They opted to stay steady. They are not dropping interest rates over at the Bank of England. I was looking at the dot plots that they put out off of the thing, and basically the consensus estimate is that they're going to cut interest rates 2 more times before the end of this year for a full 1% drop in that federal reference interest rate before the end of the year, which might very well be the reason there's a little bit more tentative reaction yesterday and a little bit more solid reaction today as investors look at the dot plots and say, okay, we got a clear picture as to where we're going, now let's act on it.
Well, yeah, and I think that's kind of brings up this point. I'm a friend of mine who does a lot of research kind of put this out there that, hey, we got a 50 basis point cut yesterday, September 18th. September 18th of 2007, 2007, right? We got a 50 basis point cut. Well, we know what happened the year after that cut.
I don't want to think about what happened a year after that cut. My retirement funds took a 50% bath after that one.
Not saying that's what's going to happen, but, history has a tendency of being similar.
Well, the reaction has been the mixed bag. I mean, the growth-oriented stocks that are interest-dependent obviously are going to be happy with a decrease in their potential bond rates as time goes forward. One of the predictions I made did come absolutely true. The Trump campaign is absolutely having kittens over this thing, screaming election interference, yada, yada, yada. And Trump's statement included a statement that was a little bit kind of sort of what we were saying, one of the messages that could come out of this game. He said, boy, the economy must really be in terrible shape if we have to take a great big interest rate cut. We must really be in trouble. And that was what Powell was trying so hard to dispel in his press conference afterwards. Doesn't look like he pounded the table quite hard enough at the time, but he was saying, no, things are going great. It's time to send a clear message that our money tightening spree is over. It sounds like they read it more carefully overnight and they responded positively, but it definitely didn't resonate that terribly fast at the end of the day yesterday, did it?
It did not. And I think, like you've said quite often, is that our money supply is still extremely high. And I've got some of my friends are saying the same thing, that, hey, we've got a bubble here when it comes to money supply. And at some point, we've got to get that in order to get inflation under control. We've got to get that money supply back to where it's supposed to be.
Yeah, this is the old economist in me coming out in the process. I tend to watch the M2 money supply as being my indication as to whether or not inflation is done yet. Starting in 2020, when we had the COVID pandemic and we needed to pump some money into the economy in a hurry, we started a spree of putting money out that ended up increasing the overall money supply in this country up by about 38% inside of about a year. Well, somewhere down the line, it's just basic economics. Inflation is too much money chasing too few goods and services. Now, you can do two things with it in order to reduce the money supply. You can increase the cost of the goods and services or pull the money out of the economy. Pulling it out is kind of hard. So what's happened is the price of the goods and services has gone up in order to eat up more of the money supply. It hasn't yet met those two curves yet. And while I don't necessarily expect another spate of 9% inflation, although a big interest rate cut from the Fed might not help that much, we've got a little bit longer to go before we're going to get down from that 3% inflation rate. At least that's my bet on it.
Yeah, I think we definitely have a ways to go. I will say this, though. I did see the Philly Fed manufacturing survey come out.
Mm-hmm.
The expectation was for it to be a minus 1.1. It actually came in at like 1.75 positive. So that's really some good news in the manufacturing survey there.
Absolutely. I mean, it does help to remember, too, when we're talking about 3% inflation being a terrible thing. We went through the 60s and most of the 70s with 4.5% inflation, almost becoming the norm for a while. So, 3%, it's not disastrous. It's just higher than they want. So everything being relative down the line, things could be a lot worse, don't you know? Other government data that comes out this morning, we got first-time jobless claims in. They were expecting about 223, I think was what I heard. We hit the lowest number since May, only 219,000 first-time jobless claims. I count that as good news for the economics as far as the employment is concerned, because we're definitely not shedding as many jobs, at the very least shedding jobs that create unemployment claims as they expected.
Well, yeah, I mean, last week it was 230. The expectation was for it to be about the same, about 229. So the 219, that's 10,000 less than expected. So that's good news on the job front.
Absolutely. So we're basically the dominant story with the unemployment claims and everything on the side is going to be what the reaction of Wall Street is to the decrease on the interest rate. Do we have any reports that are going to affect the market today? I understand Darden had an interesting quarter.
Darden's the only one that reported. I've got a couple of other ones that we'll have in the morning. But Darden reported, and it was a miss across the board, Dave. They earned $1.75. They were expected to earn $1.83, and they missed on revenue as well. Now, you would think that would have them trading down, and it would, except Darden went into a multi-year partnership with Uber for on-demand deliveries later this year to start that for multiple years. And so that had Darden up as much as 11%. Now they've slid back down some. They're still up about 7.2% this morning.
Get your pasta delivered now, huh?
I guess so. That's I guess a good deal like that.
How many servings of garlic sticks can I send the Uber guy back for? The thought goes through my mind.
Hope they get it right anyway, So But tomorrow we've got Lennar Homes and FedEx. Both of those come out after the market closes today.
And both of those are kind of bellwethers, too. Darden with the home construction industry and FedEx with just general business transportation and shipping. Resetting the table for the morning, it was kind of a reaction to the half-point interest cut from the Fed yesterday. But after everybody organized and decided to start shifting their money around, it looks like we got a pretty good morning starting out. How are we doing 45 minutes early?
We do. We've got a lot of green ink today, Dave. The Dow Jones Industrial 30 is up 1.1. The S&P 500 is up 1.5, and the NASDAQ 100 is up 2.1. Now, let's not forget the Russell 2000. It's up almost 2.5% this morning, which that makes sense on the interest rate cut.
Sure.
On the other side of the coin, we got silver making a big push today, up almost 2% to $31.28 an ounce. Gold is flat. Crude oil taking a big jump too, Dave, over 70. It's up 1.5% to $70.92 a barrel.
Actually, I don't like the number, but I do like the reason it went up, an expectation of a healthier economy worldwide, and that would be the reason the futures traded up on that on a day like this. And it looks like the reaction around the world was relatively good to us. Asian Rim went skyrocketing, everything being relative. Even the mainland Chinese markets were up by like a full percent. 6 a.m. close on balance, everything's green by up to 2.5% on some of the exchanges over on the Asian Rim. Europe is almost as happy, and in some cases even happier. I got solid green ink across the European continent, too. Average European index is up by about 1.4% halfway through their trading day. And my fear and greed index has now gone into greed, so that indicates the American investors not in bad humor either this morning. Trying to get a retirement plan together and the hinky-dinky up and down on the stock market just is not the way to plan a retirement. How do I find you to be able to put things into a box and figure out how to retire, Phillip?
Dave, that's why I created the Core Retirement Design to help people design that retirement they always dreamed of. Give us a call at 863-382-0037 to schedule your core retirement analysis. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And back here again tomorrow morning to find out whether this early morning green is a caffeine buzz or whether it's going to stick through the day. I'll see you then.
All right, man. Have a great day.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler. It's nice.
Hey, folks, I want to thank you for joining us today. I hope your week is going well. Join us again tomorrow morning, same time, same place. Until then, have a great day. Talk to you soon. Bye now.